What is up, guys? Welcome to another live session. Today is December 16th, 2019, and we're 9 days away from Christmas. So this is probably the last trading week of 2019. After that, you're probably going to see just a dead market. I want to discuss the hours for 2019's holiday session. At the end of the session, I have some data to show you how much volume increases and what the hours are. So if you missed Friday's session was amazing because what we did was we cleared all our charts. We literally went to all our majors, right-clicked, removed all drawing indicators, and analyzed everything from top to bottom to get a new fresh look for 2020. And we made some very bold predictions. If you missed that session, it is free to watch on our portal, December 12th, 2019, right here. Go ahead and click that and you should see, or that's actually on our YouTube. It's on our YouTube. It's the next video before this one. And it's called Bold Predictions for 2020 for the Forex market. And we made some great ones. We'll go over them right now because there are some trade setups for the near term that are available for the last week. So the first pair we looked at was EURUSD, and if we look on the weekly, we can kind of see we created this ascending channel. We have new levels from our session on Friday. We've created two support and support resistance zones. And we've created a nice channel in the weekly for EURUSD, and we have a short bias for the pair, and we are looking for shorts overall. For long term, we're looking for a push to 1.07400 area, and obviously on the daily time frame, we're trying to target this trading range right here. On Friday's closure, we did have a pretty bearish closure. On Monday, we have some liquidity popping back up. So we might see another attempt at this resistance, 1.11700. Look for signs of rejection to take a short to 1.09999 or just 1.10,000. So 160 pips possible on the table for EURUSD this week. This is one of the more clear setups, and what's going to help this trade, or what should help it, is the negative Euro PMI that came out earlier in the day. Flash PMI pretty much came worse across the board, German and French. And then we had some pound flash PMI also come out negative. So definitely something to look out for. US flash PMI came out right on target, so nothing too much there. And then this week we do have a fair share of fundamentals, but it's kind of sparse. For example, Tuesday it's nothing. Wednesday we do have CPI for the pound, and then the CAD CPI, and then later in the day it's more of an NSD Aussie thing. So we do have Aussie employment data. So it's looking to be relatively the same, except maybe an addition of 15.2k jobs. Unemployment should remain the same. Thursday is also more of the pound stuff. So retail sales, I think they're going to keep the monetary policy the same in the bank rate. Rest of the day is pretty quiet, and then Friday we have CAD core retail sales, and then we're done. Then we are done for the trading week and done for the year. Basically, I'll talk a bit more about that at the end, but pretty clear trading schedule. Fundamental schedule, and we're looking to short EURUSD. Let's take a look at the 4-hour. So we did have a little gap on the 4-hour. We can see right here. But nothing too major. And you know what? We'll actually just draw a trend line just as a confluence to enter, I guess. And while I do this, any pair recommendations for people on YouTube, let me know. So let me remove this arrow. Just doesn't look weird. So you can see the trading range, very clear as day. Boom, 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 boom. And we're trying to get that trend line break to go lower. So right now it's looking pretty good. The 4-hour candle, the sellers are coming back in. For me personally, we zoom in. Just looking at the price action, we created a previous low here. And so for me personally, I just want a closure below 11,000, just to confirm we're headed lower. And I know that's 60 pips away, but that's going to ensure we get a good entry, because the reason why I drew this trend line is because we could very well come here and then bounce off this trend line and make a push higher, maybe to this resistance, or maybe even go long. Who knows what the markets want to do. But you know, if you can see, that could happen. So if we get a closure below and outside this trend line, they're most likely going lower to fill out this range. So patience. It is Monday, and we do have some fundamentals during the week that could kind of push this down. And so that's what we have to do for Euro, just because obviously we created a gap here. So there's something that kind of pushed this gap. But we have two things going for us: negative Euro fundamentals, and US and China reaching a nice phase 1 deal. So all about patience, but the bias is short. It just depends on the entry. Looking at pound USD, so pound dollar has a short opportunity that could probably be entered sooner than later. And we talked about pound on Friday as well. We did a full top-down analysis. And let's actually go to the monthly so you can see what we come up with. Very clean technicals. So we started off with a trend line dating back to 2014 of July. We had a touch back in 2018 of March, and we finally broke out of that. You can see we have a support zone, and these wicks down here are historic lows for pound. So the pound has never ever gone lower than these 2 points right here. So we have this a nice support zone. You know, a lot of months spent being held up by this blue zone. We finally got a rebound, and that's obviously to Boris Johnson being elected. And so we did have a potential to go long to maybe 1.40 thousand as a long-term target for 2020. And right now it does seem still in play, but I think the short-term play might be the short. Just looking at the play we're targeting is a push up here. We could have a short-term short, as we are running into some minor resistance at 1.33700. And if we go to the weekly and the daily, you can see for many weeks, you know, 1, 2, 3, 4, 5, and now we're on our 6th, 7th, 8, 9, 10, 11, 12. So a lot of weeks being held by, you know, a lot of weeks we were held by this level, 1.33700. So definitely coming into play. You can see when Boris Johnson got elected, pound dollar went all the way above here, but the daily candle got pushed below this level. And so today's daily closure is very important in my opinion, because if it is bearish, we could have a short back down to 126,700. Excuse me, so 126,700, we could have that in play. And this move could have just been impulse based on Boris Johnson. But then investors probably realize what they got into, and it might be a continuation short or just a quick retest back here before popping back up. So the daily and the 4-hour I just checked looks pretty bearish, but we do have to just make sure we get a good entry. As you can see, the daily candle is currently printing an inverted hammer. I like to call it a teardrop candle, and it is printing that. If we just get, you know, this candle to come down a bit lower, to print that, you know, that fat body, that teardrop, I would be happy to enter short, because our stop loss will be very tight. So I'm gonna remove the long idea, but our prediction, you know, if we get a closure on the daily above this level, 1.33700, we are going to 1.40 thousand as a long-term 2020 target. Let's check out the 4-hour, see if there's an entry. So this was the candle when the election results came out. Boris Johnson won by a considerable margin, and since then sellers came back down and pushed price below this resistance we were talking about. So for us, for shorts, we could have a really nice intraday setup. All I want is first a break of this support. So you can see we pushed up and we kind of found a support at 1.33200, right? Support here, came down, support here. So any bearish closure, a bearish candle below this level, we're definitely headed lower. And a nice place to target is probably right here. You can see a nice miniature support at this level. And if you want an intraday setup for the last week of trading, I mean, this is not bad at all. right? 1.51, the stop loss could obviously be a lot tighter, but depending on where we get the entry, that's going to inflict where the stop loss is. But if we get a bearish closure down here, our stop loss will be no more than 58 pips, and our take profit will be well over 1100 pips. So that's definitely a setup I'm waiting to enter, and I'm eager to enter. We could even have a bigger push lower, maybe somewhere down to these lows, to this wick, but a nice intraday, 110 pips for the grabs for pound USD. So wait for this, wait for that crucial break, and this is the stop loss. You could change it, but I think 1.83 with the pounds volatility is good enough. So I'm going to move on to gold. While I do this on YouTube, any pair recommendations, let me know. This is your last chance to get, kind of an insight for some setups before the year ends. So someone on the YouTube chat says Aussie yen, USD yen. So I'll look at that at the end, and I'll do that after. So just give me a sec, and I'll look at XAUUSD. Okay, so XAUUSD gold, we actually looked at this on Friday as well, from top to bottom, and just taking a peek. Remove that. We also have a pretty clean chart. Let's actually go to the monthly so everyone can see. On the monthly, you can see, highs for gold up here, nice resistance zone, and this is a nice support zone. So if we zoom in, take a look. When gold went to make its all-time highs, and it came back down, it used this blue zone right at 1540 as support. It made another rally, came back down, made another rally, came back down, made another rally, came back down. It finally broke that, and if you look to the left, we have finally come back to retest that. So just based off the the 1, 2, 3, the 4 months of 3 months of price action, it does look like we're gonna go lower for gold. So I do have a kind of a bearish bias for gold, at least for 2020. Obviously, it can change because a lot can happen throughout a year. But with the dollar getting its strength back, and this, with the market tensions kind of dying down with the trade war, gold will act as less of a safe haven, and so I am looking to short it. We have some clearly defined levels here, which are just our long-term levels. And one of the levels we spoke of was 1485, 1484. And this was a level we spoke about a lot in 2018. And that's because, if you look at all these candles, they've all been held up by 1485. This is almost 6 to 7 months of just being held up by 1485. We finally got that major closure below. And since then, we've kind of consolidated, printing, hammers, spinning tops, etc. And so all I'm waiting for is maybe one more final rejection of 1485 for us to go short long term. On the flip side, if you want a safer entry, look for a closure below 1454. But we do want to target in intraday terms. You can see on the daily we have some nice resistance being made right here. And I'm going to get the rectangle tool out just one more time, and you can see all these wicks right here that we use as support, and these wicks right here use as resistance. You can kind of see why we have a short bias right now. So again, for gold, it's going to be just important to get that daily candle. Right now, we are kind of in the process of printing a teardrop candle. We just want this bearish body to be a little bit longer, a little bit fatter, to confirm there's enough sellers to take this down to 1540 to 1454. And that's pretty decent for an intraday, maybe even take you into next week, but I wouldn't hold it that long. And so just from the daily time frame, we could have a potential of this setup. Now 1.68. Now the stop loss is pretty conservative, and I'm gonna keep it that way for this week, just because it's the last week. We could have random liquidity dumps, or just an influx of last minute orders come in and sway things one way or another. But still pretty decent. Potential to make 200 pips on gold. So let's check out the 4 hour, see if there's a better entry, and see the 4 hour looks amazing right now. The 4 hour actually looks really, really good. Wow, the 4 hour looks good. So you can see the obvious rejections, and the previous 4 hour candle was a nice teardrop candle. I do want to short it. Oh, man, I do want to short this pair. Should we short it? And these are the decisions that go through your head when you become a trader or you call signals. Entering a trade or waiting. Let's see. It does look bearish. I'm just worried that the 1 hour might play a trick on us and screw us over. So I'm just going to look to the left. We do have some hourly support here. You can see. I'm going to plot that down. So the best possible entry would be a closure below 1472. You can see 1472 will probably give us the best entry because we did have some wicks. Whenever we got that bearish closure, we went lower. Whenever we got that bearish closure, we went lower. So that's what we're going to do, is wait for 1452. If we get a closure below 1452, our stop loss could be very, 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 very tight. Maybe even tighter than this, but this is good enough. And so that's what we're going to do. Wait for that closure below 1452 to have a 2.71 risk forward trade for gold. And some of the take profits would obviously be right here. We have a lot of wicks. So this would be one take profit. Another one would be obviously down here, covering these wicks. And then the final one would be 1454. So definitely a solid setup. I didn't expect the markets to present one this early in the trading week, especially this close to Christmas, but it's there. So this is what we're looking out for. 1472 bearish closure. Perfect. So let's look at USD yen and then Aussie yen, and then we're going to talk about 2019's holiday trading schedule. And so USD yen, we have some pretty clean levels here, but there was a nice short earlier in the week, just from this past level. But over the weekend, it kind of just found some buyers and has kind of made a push. So let's see the daily. And the daily is looking pretty bearish. You can see our daily USD yen long call played out perfectly to perfection. We do have this ascending channel coming into play, and if I extend that over, remember this trade setup. If I extend that over, you can see that long setup was from that trend line bounce, and if I extend this top trend line over the channel, you can see a potential target is probably up here, where a long-term trend line and our ascending channel meet, maybe at 110. 110 is a nice long-term target for USD yen. 120 pips away, and I think that's what I'll see for USD yen. Since right now it's so close to resistance, I don't have any setup, but you can see this trend line dates back from 2015, and we're finally going to make another attempt to go up there. And this is expected because the trade war is kind of dying down with that phase 1 deal. So the safe havens are going to lose its strength, and then that's yen. Yen's going to lose a lot of its strength. And you can see a nice push, so it does look bullish. So the overall target for at least the midterm to the long term is 110.00 flat for USD and for FX Bruv. I don't see an entry right now just because we're near some resistance. Maybe wait for the daily closure above this level and see what happens. But with the setups we just discussed, we have some better ones to target than this. But it's nice to see our USD yen long from the past play out. Now Aussie yen, quick look. Then I'm gonna look at Bitcoin, and then Tezos, and then we'll do a quick look at the 2019 holiday trading schedule, so you guys know when to be in the markets, when to not be. And I'll also show you some stats, some data showing you how much volume decreases during this time of the year. So Aussie yen, we have some clean levels, and it is showing a short. Surprising, but it is showing a short. This blue resistance region has provided many shorts for us. Our last short was from here. We didn't get that full move down, but we did get, a nice chunk. And the secondary resistance, on the daily candle on Friday, we did have a bearish closure. But today some buyers are popping back up. And that's just because of the phase 1 deal. You're having the safe havens lose weakness. So for me personally, we could have another attempt to this blue region, 76 flat. For shorts, maybe look for a closure below, back below 75 350.